I'm just really not together today. What is going on here? I would invite you to, join me here on the stream. We'll do this live. I apologize for all my cumbersomeness in the with the technicals here at the moment because I've got stuff happening on my screen right and left. Let me go ahead and share a screen so that we can at least be looking at what we're going to be talking about here. There we go. So let's just check on one more thing real quick. And I can tell you that we got a lot of ground to cover. So again, live chat is open. If you would like to join me, I would love to have you. Chime on in. If you've got questions, I'll do my best to answer them. If you have insights, by all means, please share them. We love hearing different opinions and views, and we all grow together. Simple as that. All right, let's dive into this thing. First things first, let's take a look at this chart. As you can see, this is the Bitcoin daily chart. Looks pretty ugly here the past few days. If you aped in here on Monday, when we came off the weekend, had that wick up to 116K and change, that clearly was not the time to buy, right? We had big resistance up here in these moving averages. And as I have said for weeks now, it's not how you start, it's how you finish. So when you see these wicks in either direction, it's really where things settle down at the daily close that has the most bearing and the most importance. And something that I'm looking at here on the daily chart that I really do not like is it looks like we have an imminent death cross heading for the 21-day moving average, heading for the 200-day moving average. That is not typically a good scenario, with the exception that if you can weather the storm, it is often where we find local bottoms, right? So here was a scenario where we had last time this happened back in March, we had a dump down to that. Where did we go? We went down here to a double bottom range here. Actually had a wick down to what? 2222. That was 80K, 79K. Excuse me, 74K. We closed at 79K that day. Again, it's not where you start, it's where you finish. So that was a big recovery on that big wick. But nonetheless, that is what has gotten us back up to this point. And now we're in jeopardy of testing range lows again. And dare I say, we did hit this timescape level here today. And we're recovering at the moment. I know we have an options close tomorrow. Rumor has it that max pain is around 114K. So we could see a resurgence here. And there's the whole October thing, which I warned you guys at the beginning of the month, do not buy into these narratives. October is not a thing. Up only is not a thing. Okay. Yes, sometimes it happens. And there's a lot of times where we've had green Octobers. And yes, we did reach a new all-time high here. Whether that was manipulation or not, kind of irrelevant. What matters is the volatility here. Not only did we have an all-time high, but we also, in the very same month, had the biggest liquidation of all time. So the point is, don't go all in. Don't buy into these up-only October narratives or anything like that. Trade the charts, trade data. On the monthly time frame, this actually doesn't look so bad. This looks like strong consolidation on the monthly, and the moving averages are not wound up. So that's a positive on the monthly. On the weekly, you can see similarly, we have some consolidation down in this range, but we've got to reclaim this timescape level here. Otherwise, we're going to go, there's a good chance we go at the very least test the 50-day moving average, and then potentially go test the yearly open down in this range, right? So keep that in mind as we move forward. The screen is very tiny. Could I make it bigger in full screen? Okay, so I'm sorry. I may have. There's a new thing happening here with StreamYard, which is a platform that I use. There is a phone version that's the tiny screen, and there's a big screen version, full screen version both of them on YouTube. So you should be able to see that. Let me see what's happening real quickly on Twitter if the right version is playing on Twitter. Big version on Twitter, and there's a big version on YouTube. I closed that channel so I don't have feedback on it right now, but you can find that. Okay, so I apologize for that, and I may just eliminate this. This is a new thing, and I not sure I like it. Thought I'd be helping out guys on phone, who are watching on their phones, but probably in the future, I think I'm just going to eliminate that, and then we'll be on this big screen version. So hope that helps you out, Bryce. Yeah. So if you're on YouTube, just go to the channel and click on the other one. There's two of them there, on Bryce. So you can do that right at the, right on my page. And let me see if I can get in there really quick and drop the link. Okay. Let's see. Yeah, you're getting it live in the fire. So which one is which? There's the phone version. So here's the link. I'm going to drop it in the chat for you, Bryce, so you can grab it here. There you go. And let me just do the same thing real quick over on the Telegram community, so those guys have it as well. Here's the full screen version. Okay. Now, sorry about that live in the fire housekeeping going on here. Let's find our way back to a chart. Okay. Hope that helps. Sorry for the delay. Thanks, Bryce, for pointing that out. I appreciate it. So, I started this thing talking about this, the rate cut and the meeting between Trump and Chinese President Xi Jinping. So let's backtrack a little bit and go there. It seems, and I was looking at the crypto Twitter this morning, and it blows my mind how many people are shocked or surprised by the price action on a day like today after a rate cut that was completely baked in. The dynamics of these rate cuts and how the market responds to them has changed over the years, and largely because we have so much, they're telegraphed so well at this point. And now we have like CME and the speculative markets that are, giving you surveys and odds of a rate cut. And we know that we had, like 98% of people surveyed said thought there would be a 25 basis point rate cut yesterday, and there indeed was. We knew it was baked in. It's been baked in for a month. It's been baked in since the last cut, maybe even before that, but it's certainly been at high odds since that time. So completely baked in. Price was not going to move on the rate cut announcement. Price would move on words from Fed Chair Powell, after that announcement. So we saw that rally on, Sunday night into Monday, and people got excited. That was really smart money front running the announcement. Simple as that. And if you got caught up in that, I'm sorry. The good news is, well, there is good news because it wasn't just about the rate cut. Okay. So in addition to the rate cut, we got that 25 basis point cut from the Fed. And of course, Trump came out from his meeting with Xi speaking very positively about a deal. So why didn't Bitcoin and ETH or alts explode to the upside? Well, part of it is the fact that rate cut was baked in. We knew that going into the day. And then in Powell's remarks afterwards, we heard him say things like, "Don't count on a cut in December." That is as blatant and direct as he gets. Okay. He's telegraphing to the market not to expect a cut in December, which is certainly probably a deviation from what was expected, at least coming in to the meeting, but not a shock. And not a shock for a number of reasons. We hear them say all the time, we're data dependent, and they've had limited data, right? Government shutdown, he's had limited data. So they are proceeding with caution, as the Fed always does. Certainly too slow for most people, most definitely too slow for the president. But that is what it is, and that's not going to change. Powell holds this post until March, and so he's going to stay his course and then ride off into the sunset, and then likely go work for the private sector, or perhaps retire. Who knows? But there was a positive news on the backside of that announcement that, I won't say an announcement, that thought to not, or that hint not to expect a cut in December. He also said that they would likely be pausing QT, that's quantitative tightening, in December. So ending QT is not exactly turning on the money printer. However, it is a quiet tailwind for liquidity that's likely to have a more positive impact on risk assets than a rate cut by itself. So mixed news from the Fed, proceeding with caution, but the macro view of that would be an end to QT would be the most positive thing we could probably pull out of that. Are there inflation fears? Absolutely. Are there fears that unemployment is on the rise? Yes, it sounds like that's going to happen largely because of AI, right? Jobs are getting cut. Big companies are already announcing some big cuts. So that is likely going to impact the unemployment number. Of course, we're not seeing those numbers right now. And maybe the shutdown ends. I think there's a deadline to pay some bills on November 1st. So just maybe those knuckleheads in Washington might actually put together something at least temporary. What do they call it? A temporary resolution to keep the government running and pay the people that they're not paying right now, which is just freaking ridiculous, right? Of course, Congress is getting paid. Those guys are getting paid, but all the people that work, right? All the military not getting paid. Not cool. Not cool at all. So that's my take on the rate cut issue. Now, as for the Trump-Xi deal, I've said this a lot of times. Lots of hot air coming out of Trump. He always is going to position. He came out of the meeting with Xi talking like a deal is done. He said the meeting was and I quote, on a scale of 1 to 10, with 10 being the best, it was a 12 out of 10. Really? I got a big problem with that. 12 out of 10. However, nobody actually signed anything. You don't have a signed deal. And without a signed deal, you don't have shit. And when you're dealing with someone like Xi Jinping, similarly to Vladimir Putin, how much confidence and trust do you have in what they say? How much trust and confidence do you have in what Trump says? If you can find an ounce of integrity between the three of those guys, you should probably start mining rare earths, because you're finding something that nobody else can find. That said, there are some elements of what was discussed that are positive if they actually sign a deal on them. One is, and probably the biggest and most important, is a pause to that rare earth restriction that China was imposing, not just on the U.S. but the rest of the world. So there's a 1-year pause on that restriction, and it will be renegotiated every year. So That's not, I mean, it's a positive that, that they're pausing, but it is a concern that that is on the table. That's basically leverage that China has on the rest of the world, um, at its beck and call. That's the wild card in their pocket. Um, they paused the 100% tariff that Trump, threatened a week or so ago. Um, and uh, Trump asked um, Xi to help him convince Putin to end the war in Ukraine, which, regardless of what he acknowledged to do or agreed to do, let's not forget that China is Russia's number one partner in that deal, and that Putin and Xi actually conspired and are conspiring to destabilize the U.S. economy, the U.S. dollar, and knock the U.S. off the top of the world order. Okay, so I take no confidence in any commitment that China has made at this point, especially without a signed deal. So that's why the world is not too terribly excited about what's going on. Now, if we get a signed agreement, despite the fact that we still, only have so much trust in any of the players in this deal, a signed agreement is going to bring in a lot more confidence than what we have at this state. That, in my opinion, anyways. So we'll keep that in mind. And while we're doing that, let's just eye up fire charts and see if anything is happening here. So what else did I want to discuss in this mix? So basically, what this means for markets is, in terms of the China-U.S. relations, risk assets usually like de-escalations of geopolitical tensions, but they like signed deals more. So there's that. What's the market going to do from here? I personally, we had this monthly close happening, and as you can see here on fire charts, we have some liquidity overhead right now. But beyond that, if we can clear this 107, 108 level, there is room for some upside. There is room to push back up here, right? It's pretty thin up above. Meanwhile, there's a nice bid ladder down to 100K. And this is like, I want to say 170, 179 million, something like this in this range. So there's a pretty good chunk of liquidity here. I'd like to see a bigger concentration up higher to keep price elevated, but we may not get it. So here's what I'm watching in that regard. Let me zoom out here and show you something. I posted this chart earlier today, I think. And you can see this bid ladder actually extends all the way down to the 90K range. There's 12 million, 12.5 million there. There's another 13 million there. And then we get into bigger concentrations from 100K up, right? 34 million, another 27, another 28, 29 million, et cetera, et cetera. So, collectively, this is a pretty decent chunk, but it's spread all the way down. So what I'm watching, and I'll watch this on a lower time frame. I'll watch this on the daily chart, and the weekly to get more granular with it, to see where liquidity is moving, right? Are these bids stair stepping up? And let me add some contrast here to make it a little easier to see. Are we going to see this stair stepping up, or are we going to see some of this moving down? And these will be early indications of how price is going to react. Now, the fact that we're seeing this level right here, 4 to 5, this is 105K, right? Starting to build a little bit more, that's encouraging. And it's why we're seeing, notice right when that liquidity came in here, right? We were at 21 and they just added a few more $1 million, right? They added it, took from 21 to, is that it? Was it another $1 million was all? It was enough to get price moving again. So that wasn't much of an ad at all, to be honest with you. I thought it was going to be more, but um, what you want to see is bids concentrating at these levels, right? And as we zoom out, you can see that we have higher concentrations. The brighter colors here represent more liquidity, as you can see here on the left-hand side. So we have much higher concentrations of ask liquidity overhead than we do in terms of concentrations of bid liquidity below us. What we need to see, or what bulls want to see anyways, is brighter colors below price, right? We want to see heavier concentrations of bid liquidity, and that will push price up through these asks. And yes, 130, 140, 150, it's all still on the table. It's even still on the table for this year. Whether we get there or not remains to be seen. I personally am not expecting to see just like a rocket launch, explosive move to the upside without some major fundamental developments, like in terms of, I don't know, a US Bitcoin reserve actively being purchased rather than just spoken about. Something like that might get things flowing, but short of that, or something of that nature, I think we probably will see more of a grind up into the first or possibly second quarter of 2026. So those are things to keep in mind here. So what do we watch, right? So if the December cut is really off the table, right? And Powell just told us that, hey, it's likely not going to happen. And China drags its feet on a deal, or Trump goes back and forth and starts, talking trash again. Then we're probably going to be into one of those, good news gets us some pumps, and those should be for profit taking, and bad news is going to give us some dumps. What to watch between, now and whenever, in addition to that liquidity, is what's happening with Bitcoin dominance and total 3 and stablecoin dominance. And this is a chart I share with you guys frequently. Let's see where that guy is. Okay. And as you can see, when we get into risk off environments, money goes to stablecoins and it goes to Bitcoin. And Bitcoin had dipped below this level here, I think yesterday, and now, coming back up because there's some concerns, right? Everybody panicked when price started dipping today. And so you can see total 3 not looking so good right now, right? Came off of its highs, and it is deteriorating. ETH is deteriorating. Meanwhile, stablecoin dominance is starting to climb again. And Bitcoin dominance is starting to climb again. It is nearly at 60%, 59.92% at this very moment in time. Okay. So that is something to watch. Money, institutional money, is very comfortable with Bitcoin. A lot of people are comfortable with ETH, but not as many as Tom Lee would like would like. And not as many as those of us who are following Tom Lee's narrative would like. But we're still early. And when I say we're still early, I'm not saying we're still early just in the development of crypto or the evolution of the financial system. Well, we are early on the evolution of the financial system. We're literally at the genesis of that. And so with that in mind, there's a lot more institutional money and institutional, how should I say, development happening around ETH. Banks are literally building their financial system, or building for this new generation of the financial system on ETH. So that is something to be mindful of. Okay, that doesn't mean that ETH gets to $20,000 by the end of the year. Although, I think Tom Lee's thrown out 10 to 15 grand as a number. I'm not necessarily buying into that. I happen to think he's a brilliant guy. I happen to think he is he's right about a lot of stuff, and and historically his track record is amazing. He was the first really traditional, TradFi guy, Wall Street guy to recommend Bitcoin openly, and I think he is on to something with what he's approaching to do here with ETH. I do think though that there's a balancing act that he has to play, and that he is trying to usher new money into this asset, and he is trying to paint a beautiful big picture for ETH. And quite frankly, not enough people are buying it right now. So he's out there promoting. I just hope that he is. I hope that he's promoting and targeting proportionate to what his conviction really is. But his neck is stretched out on this deal right now, so you can imagine that. But he's in it for the long game. He's not going to be rattled by by short-term volatility. And if you are a long-term investor, neither should you be. Now, if you're trading short-term, that's a different story, right? If you're trading short-term, this is a trader's market, in my opinion. So it's frustrating for people who are holding for the long term, or people who are just expecting to ride Bitcoin up, and they're wondering, hey, how come the stock market is outperforming right now? Well, I don't have a great answer for that, but I can say that I think that the top is not in for Bitcoin. I think that next year we're going to see Bitcoin at a higher price than we see it today. And I'm okay with the volatility that happens between now and then, because I started building my position back in 2022 on the FTX crash. So I've dollar cost averaged my way into a position that is in a very nice profit right now. Would I like to see us back into price discovery making highs? Absolutely, I would. But I've tried to game the system and snipe these tops and bottoms, and it's tough, right? So unless you have the time to sit there and trade it every day, and you know what you're doing, and you are using data to make those decisions, it is a really, really hard game to play. Okay, so I'm just telling you. I know a lot of you out there are trying to get rich quick, and get rich quick isn't really sustainable. That's the problem with this game, right? A lot of guys come in and they have some early wins. Happened to me when I first started back in 2017. It was up only, and I didn't know any better. So I kept throwing money at it. I was like, all right, this is sweet. And guess what? Then the bottom dropped out, and I lost my ass. And I learned the hard way from the school of hard knocks, how this market behaves, how to trade, most importantly, how to manage risk. And I got back in the game, and I made my money back, and then some, over and over again. So that's just a word to the wise, if you will. So this is what I'm watching, right? I'm watching this very, very closely every day, and I'm watching liquidity movement every day. And these are the clues that are going to tell us where things are moving, and where the smart money is moving. And right now, the smart money is, at least in crypto, is in stables and in Bitcoin. And I think a lot of people are waiting for the monthly close. Sit on hands is a strategy, and out is a position. I personally am not out. I am sitting on hands, quite frankly, waiting for some directional clarity to see if I'm going to indeed buy any more, or if maybe I'm going to take some more profits here at these levels. I have not sold any more down in this range. I'd prefer to be back up into the teens and the 1-teens and the 120s before I consider taking any profit. And I may not even do that, because I have conviction in the long term for Bitcoin. So if you're trading, though, this is something you're going to watch, and the headlines are something that you're going to want to watch, because it's going to give you some clues of when you're going to see spikes, when you're going to see dips and when you're going to see rips. And buy the dips, sell the rips. That's pretty much standard operating procedure, right? I'd also be watching for an end of this government shutdown. Yes, that will be good for a number of reasons, and the market will probably respond well to that. Market will also respond. Would like to have that data that we're not getting here on the daily from the government, that inflation data, that economic data. So when that returns, I kind of expect that to be maybe overweighted a bit, right? Like we haven't seen a print in a while, and suddenly we're going to see probably some bigger numbers than anybody was expecting. So watch that. Now, if we get some follow through on, we close the month out and we start seeing liquidity come back into the game, into Bitcoin, into ETH, or potentially, potentially select alts. Like, how's it going to work? And like I said, when there's more risk concern, the money's going to go to Bitcoin. And when some of that risk is alleviated, we'll see it moving into ETH and to a select basket of alts. So if we get that liquidity coming in, and we actually get a signed U.S.-China deal, that's when we can start talking about a scenario where, a high tide raises all boats and we see everything moving together. Without that, I think it's, like I said, it's a trader's market, and you've got to watch. This chart is going to tell you, this chart is going to tell you a lot, and fire charts is going to tell you a lot about order flow and liquidity, right? We can see it on Bitcoin. We can see it on hundreds of assets, right? On literally every USDT and every BTC coin pair on Binance. So that's like 800 pairs. We can see it. So you don't have to trade blind. You can actually see exactly what's happening here. Let's take a look at ETH really quick. See what's happening there. And I'll look at, let's go to the daily. You can see running into some resistance here around this 3,800 level, just below it. And whales, not super aggressive at the moment. Let's look at the ETH chart. ETH chart, look at this. Absolutely picture perfect support test to a January 2022 timescape, which is coincidentally pretty close to the 2025 yearly open as well. Let's see what's lurking below. Okay, that's 2024. Okay, so this is pretty interesting right here. We get this wick all the way down, and now we're this was a flush straight up, and it went right to this. I mean, perfectly to this timescape level on that daily time frame. Let's see what the weekly looks like. Let me get my auto back on. So on the weekly, you see the support test, and this is coming to the 21-week moving average. At the moment, it's below it. We wicked below it. It's, again, we're talking a weekly time frame here. So it's not where we start, it's where we finish. And we need to see a finish above this 21-week moving average. If we don't, then we're most likely going to see a bigger breakdown into, the yearly open would be my first line of defense. And then I would, if that doesn't hold, then I think we could, go to this 0.618 fib. I know it's hard to see because they're the same color as the timescape levels, but here's a 0.618 fib. And that's at what, 33.50, 33.40. I could see a test down to this range. And obviously, if that doesn't hold, then we've got these moving averages in the 0.5 fib down here at 28.73. I would be a buyer down there, buddy. At least I will be. Whether you are, that's up to you. And obviously, I'd be looking at other conditions on the market at that time. On the monthly time frame, this to me looks like a beautiful support test to that 2024 Q3 quarterly open. Um, I almost wish it would have come all the way down to the yearly open. As you can see, the yearly open is has pretty good confluence here with the 0.618. So this is a legit target here in that 3340 range, in my opinion. Keep that in mind. And do we have any? Yes, we do. We're on a down signal here. Obviously, we're getting that. Yeah, the whole October factor not looking very good, in my opinion, at the moment, unless just something radical happens in the next 24 hours. On the Bitcoin side, of course, that's where October really is represented. And so where do we have to close to get a green close on October? We got to close above 114 and change. On this exchange, it was $114,065. So we're a long way from there. I believe that's right around where Max Payne is on the options market. So so don't rule it out, right? Because Max Payne likes to get visited a lot. Wow. We covered a lot of ground here. I hope this has been insightful for you guys. I really do. And, if you're talking like trading alts at this point, I would be really selective and really cautious because they're getting beat up right now. And again, your clue to that, at a glance, you can see it. You can see it right here. Total 3ES, for anybody not familiar, this is the top 100 coins by market cap, excluding Bitcoin, excluding ETH, and excluding stable coins. So this is really a basket of alts, the largest ones, and they're getting beat up right now. Simple as that. So what you want to see, if you're going to start trading alts, what you want to see is obviously a spike in this total 3. But you'll also notice when that happens, you're going to see a rapid decline, a sharp decline in stablecoin dominance. So that decline in stablecoin dominance could translate a lot of different ways. Where does the money go? When stablecoins are declining, where's the money going? You can see that it goes, here in this instance, at this moment, this was back on Wednesday, the 22nd. We saw it declining. Stablecoins were declining. And that's when alts were going up. And then on last Sunday, the bottom dropped out, right? That's when everything started dumping. And money started flowing back into Bitcoin. And now money's flowing back into stablecoins. So be patient. You might want to sit on your hands through the monthly close unless you have, a plan and a target. I would just, I would certainly stick to your plan, but I wouldn't be over trading the volatility here. You'll get some clarity. Hopefully you'll get some directional clarity after the monthly close, and we'll be looking to trend precognition for that as well to see if we can get some directional clarity, right? Yeah, you want to talk about alts? How about this one? That was a 99.9% dump on Cosmos. Let's look at Bitcoin for starters, because that's what matters most. On Bitcoin on the monthly, you can see here I've got a few different versions going. This is the A2 plus algo on Bitcoin, the arrows. So we'll be looking for an arrow here, and we'll be looking for a signal out of this A1 slope line here. And judging by this wick, which was the all-time high, I would not be surprised at all to see a down signal on this candle at the print. Because if you look to the quarterly, guess what? Quarterly is already showing a down signal. So this means we're not likely to make new all-time highs before the end of the year. Doesn't mean we can't, but just means there's a high probability that we won't make a new all-time high before the end of the year. So um, anticipate more consolidation, perhaps chopping down into the right before we um, rally into the next leg up. That's just my take on things. You may have a different plan. I would say take the data, take the insights, do with them what you will, and stick to but stick to your plan, right? Consider what I'm telling you, factor that into your decisions, but at the end of the day, you make your own decisions and you stick to your plan. Hope that helps you out. I enjoyed putting this together for you. Sorry for the technical glitches at the front of it, but at the end of the day, I'm doing my best to help you guys trade smarter. Hope this helps. If you want more info, you want more insight, you want more engagement with me, make sure you hit the subscribe. You can follow me on the X channel. You can follow me on YouTube on both my personal page and the Material Indicators page. And if you haven't joined us in the Material Indicators trading community on Telegram, do yourself a favor. Head over. There's a link to it on the top of the Material Indicators website. There's a link to it at the top of in the profile on Twitter and in the profile on YouTube, excuse me, or X, whatever you want to call it, X, Twitter, and YouTube. There's links. Join that community and engage with us. We're there every single day, all day. All right, going to leave it right there. Hope the rest of your day is good. Hope you navigate through this well and don't lose your ass. Here's to trading smarter.